the United States defined the unit of account that most of the world uses. And then these institutions help access, they get to dictate the terms for how countries might be able to access the unit of account. And so that combination is extraordinarily powerful. And, it's kind of an extension of what the United Kingdom did as well, because when the United Kingdom was the global empire, they had enough clout to say, hey, hold these bonds instead of gold for your reserves, which then allowed them to rug pull everyone later during World War I. And the United States has been in a situation that's similar, where they say, okay, hold our dollars. There's nothing better that you can turn to, so just use our dollars. And then these guardrails keep the system in place.
Washington's penchant for wielding the dollar's global sway as an economic weapon has spooked countries from China and Brazil, fueling an unprecedented campaign to dethrone the greenback. But the so-called de-dollarization drive doesn't come as a surprise to all. Some experts have been warning of this for years. In a 2019 report by the London School of Economics, political economy expert Julius Sen explored the way the Donald Trump administration weaponized the dollar by scrapping the Iran nuclear agreement signed in 2015. At the time, the U.S. slapped several sanctions on Tehran for failing to curb its nuclear program, including restrictions on the country's use of the greenback. Fast forward to 2023, and some of the recent rumblings across the global currency and monetary landscape are strikingly in line with Sen's prognostications. By now, the world has seen more instances of the dollar's weaponization, most recently against Russia in response to its war on Ukraine. From barring Russia's access to $600 billion in reserves to booting the nation out of the SWIFT international banking system, the U.S. has gone more aggressive than ever with its dollar offensive. Lyn Alden in this video explores the beginning of this dependence on the dollar and how it has evolved, giving it more power and crushing everyone who couldn't comply. She also talks about the debasement of currencies and the ideal behind the petrodollar. Just sit back, hit the like button, subscribe, and enjoy the video.
A small number of countries are able to dictate monetary policy for most countries. And obviously there's a risk if some of the economic prescriptions they're giving are not the right ones, because they keep, whenever a country finds itself indebted, let's say it's Egypt or something, if they want to do financing, they often have to do it in dollars. Then they get a problem where they have too much dollar-denominated debt. Then they have to go to these, centralized guardians of the dollar. They have to go and say, hey, we need, we have to go to the kind of central hub of the system and say, hey, we need another dollar loan to fix this. And then those hubs can say, well, we'll give you the loan, but you have to do these, say, 10 set of things to your country. And every country that goes through this gets a similar set of policies that they have to go through. So it's like, okay, devalue your currency, reduce energy subsidies, shift more towards exports. They do these series of things, and it's this economic experiment that's kind of being repeated almost cookie cutter like to different countries. And if that ends up, let's say in history, you look back and say that was actually a bad set of economic prescriptions. The risk is that it's been done everywhere. It's not like different countries all kind of doing their own thing. It's just one cookie cutter approach that's applied elsewhere. And I think one of the overall harshest things around this era is not necessarily war. It's the stalling of development, the inability for people to build capital in many of these regions. If you're in an environment where the currency itself is very weak and it's very flexible and you're always getting rug pulled, it's hard to build significant capital. You plowed into illiquid things. You basically have all those frictions, and so you don't actually see almost any cases of emerging markets, markets that are classified as emerging markets, becoming developed markets. It's actually extraordinarily rare, and the handful of success stories are mostly in Asia. There's been enough kind of economic mass there to make it work, but the success rate of going from in this dollar environment, from going from developing or middle income to advanced income is like threading a needle, because it's so hard to build capital under this arrangement. It's amazing how people are able to adapt to what are otherwise, basically they've been robbed of their ability to save money easily. And when we think about it, all the countries that are labeled developed today, they developed under what was essentially a hard money environment. They had gold and silver as money. They developed, they built capital. And then even as they transitioned to fiat currency, they already had the benefits of that development. Whereas what we see today under this roughly 50 years of petrodollar system is that you don't see that same type of development. You don't see that capital accumulation. Now, you still obviously have better technology and better access to energy. So it's not as though development doesn't happen. It just happens in a much, I would say, more like kind of slowed down or artificial way, because all these countries are the people in the countries, the companies in the countries, they're robbed of their ability to easily accumulate capital. Now, you can still accumulate illiquid capital, you can accumulate foreign capital. Many of them do that, but that real organization, that real development comes from the saving of domestic liquid capital, and that's much harder for them to do.
Over the past several years, and with accelerating frequency in the past 6 months, oil-producing nations like Russia and Saudi Arabia have signaled their intent to break with the so-called petrodollar system. The petrodollar system, which emerged starting in roughly 1973, is the nearly uniform use of U.S. dollars to denominate and often settle worldwide oil trades. Though it is sometimes mistaken for a formal rules-based system, the petrodollar is better understood as one aspect of the broader role of the dollar as a global reserve currency and the resulting exorbitant privilege the U.S. enjoys. Specifically, historians regard the petrodollar as one of the most important consequences of the transition from the Bretton Woods framework for global finance, which centered on a managed gold standard, to the more decentralized and market-based neoliberal money system that supplanted it. Lyn Alden now explores how currencies are debased and the ideal behind the petrodollar.
The two main debates at the time were between the United States and the United Kingdom, and it kind of represented the switchover of world reserve currency status. The UK had a vision where countries around the world should get together and have this kind of super sovereign unit called a bancor.
Bancor, yeah.
The bancor. And that would be something that they can all peg their currencies to, and that will be used for global settlement. The downside of that structure is that it would require a lot of cooperation and be pretty fragile, because they have to all agree in this kind of abstract unit. The United States said, no, we'll just peg the dollar to gold and use the dollar as that centerpiece. So all the other currencies can peg themselves to the dollar. The dollar is pegged to gold. It's redeemable in gold for those official foreign creditors, even though it was no longer redeemable for domestic Americans. It's still redeemable for these international linkages. And the idea was that they'd have this kind of stable monetary environment. And it's an increasing level of abstraction. So you go from banks hold the gold to banks, central banks hold the gold, and banks, use the central bank ledger, to the United States holds all the gold or most of the gold. Other countries, peg themselves to the dollar. You basically have this increasing chain of abstractions, and Bretton Woods was that last attempt to still have gold at the bottom of that layer of abstractions. And I think that one of the biggest misconceptions is that the problems started in 1971, whereas I argue in the book, and I am not the first one to make this observation, that it was just flawed from the start. It was just not a well-designed system. And so it was inevitable that would break. You had this system where, banks were not constrained by the amount of gold. They didn't even, they weren't even auditing the amount of gold over in Fort Knox, right? It's just all that gold was not a factor in bank lending decisions, either domestically or in the offshore Eurodollar market. So you had this proliferation of more and more claims in the system for gold, and you had a falling amount of gold. And the inevitable happened where around the margins, countries would slowly redeem dollars for gold. So you had gold, the amount of gold in the United States going down. You had the number of claims for gold continually rising until it reached comical levels and broke. The amount of gold just went straight down from there. The system was just inherently unstable. So a little over a decade into that, it just broke. Then that's the first time where the whole world found itself, it had centralized itself more and more and more, and that central piece broke. So suddenly the world's kind of awash in none of our currencies are backed by anything, except for like Switzerland still had a gold standard, but like most countries were, their currencies are flailing in the wind now. And you can still mandate acceptance of that currency in the country, but it's hard for a country to go to another country and say, hey, take my random pieces of paper or my arbitrary bank ledger that's redeemable for nothing and sell me oil. They're going to slap at you. And so in that environment, you had a breakout of inflation across the developed world. But the United States was still even though they broke that, they defaulted on that promise, they still had a very large amount of economic and military clout. So they instead said, well, let's just put the dollar and the treasury itself at the heart of the system. And basically, it's been the most sophisticated attempt at a fiat currency as possible, because they went to Saudi Arabia and other members of OPEC and said, hey, I know it's not backed for gold anymore, but we're going to have pretty tight policy, fiscal and monetary, and we can sell you a significant amount of arms. We can protect your region, but let us do it in dollars, and then take your dollars and buy and hold some of our treasuries as savings. So instead of stacking gold, stack treasuries. And obviously that came with risks to those countries because it's not as sound as gold, but then it came with all these added perks, these trade relationships and these protector relationships. And so basically the United States had enough economic and military clout to replace gold. They put their ledger at the heart of the whole world ledger. And previously it was through abstraction, and now it was just direct. Just the dollar itself was the global unit of account. And I think we can argue that we're still in that era. I mean, it's slowly now it's fraying around the margins, but this era that we've been in is still the structure of how the system works. And what's remarkable is that Bretton Woods was a very short-lived system. It's actually remarkable how long this petrodollar system has existed. It's been about 50 years.
Signals of a reduction in petrodollar trade have added to persistent anxieties about the dollar's reserve currency status, which is also currently under pressure thanks to inflation. An erosion of the dollar's reserve status could seriously undermine U.S. debt financing and other economic fundamentals. That's why some recent news in oil markets has raised anxiety about the dollar. In March, it was reported that Saudi Arabia and China were accelerating talks to price and settle oil contracts in yuan via Shanghai Petroleum Exchange. China has also conducted talks with Brazil, a significant crude oil exporter, about ditching the dollar. Indian traders have reportedly settled some Russian oil purchases in rubles and dirham, the currency of the United Arab Emirates. That all sounds very worrisome for the dollar and U.S. financial hegemony. But a deeper dive suggests much of this is empty posturing, not because the world loves the dollar or the U.S., but because no other national fiat currency is positioned to supplant their role in the system. At the same time, the petrodollar system has given oil exporters large and sometimes troubling influence over the United States via investment. Viewed on a long enough horizon, the deadlock highlights the potential demand for a truly neutral global currency not subject to politicized manipulation by a single issuer. In short, the tensions at the heart of the petrodollar system point towards a solution that looks something like Bitcoin. To crudely synthesize the historical debate over petrodollars, it doesn't seem a stretch to accept that both U.S. power politics and liberalized economic forces contributed to the emergence of the petrodollar system. But in the present day, it seems the economic reality of the dollar trumps any politicking. As so often seems the case in a supposedly free market system, there simply is no alternative. China's yuan and Russia's ruble offer none of the liquidity and convertibility of the dollar and add risks to boot. China's yuan does not trade freely, making it unusable as a reserve currency. China's rulers have also recently demonstrated their willingness to compromise property rights and reshape laws on the fly. Russia's economy, already a dog before the Ukraine invasion, is flailing under international wartime sanctions, making its currency utterly laughable as a dollar replacement. In short, threats of a shift away from the dollar have strategic political benefits for the likes of Saudi Arabia, but that doesn't mean they'll be stockpiling rubles and Russian equity anytime remotely soon. What do you think of the petrodollar system? Will Bitcoin be able to replace this system? Let us know your thoughts in the comment section below. Also, don't forget to like, subscribe, and turn on post notifications. Thanks for watching.